Bitcoin is very highly correlated to that. Um, and so if you look at that, it's arguably more correlated to that than even its own halving cycle. But that's another variable. So early, in spring of 2024, Bitcoin is having another supply halving, meaning that the number of new coins generated every 10 minutes will get cut in half. So you have a supply shock, while demand is still pretty steady, and the spot ETF could potentially drive more demand.
Hey guys, welcome back to Everyday Finance. In this video, Lyn Alden discuss about Bitcoin and crypto, according to Lyn Alden. If you compare the price of Bitcoin to global liquidity, which Lyn Alden calculate using the global broad money supply expressed in dollars it is impacted by one of two primary methods. Either money printing is increasing the money supply, or credit creation or the dollar's decline, respectively. And when the I is growing stronger and credit is becoming scarcer. Global liquidity is declining and the dollar is declining and credit is growing. Global-wide money liquidity is increasing and there is a strong correlation between Bitcoin and it. And so if you examine that, you could argue that it has a stronger correlation with that than even with its own cycle. But that's an additional factor, so you already know that in the spring of 2024, Bitcoin will have another supply, will result in a halving of the quantity of new coins created every 10 minutes. Therefore, you have a shock to supply, given that demand is still quite stable, and the spot ETF could potentially increase demand if you have BlackRock's approval and obtain these simple means of getting by trillions of dollars in some forms of capital that is locked up, to have a liquid investment vehicle that is superior than the future ETF is superior to the grayscale offering, which features things like variable premiums for navigation and other things, and lots of things Lyn Alden discuss. So please watch the video to end, and share, subscribe our channel Everyday Finance. Thanks.
So I think that's part of it. That affects timing. Another thing we're seeing is that if you look at Bitcoin price compared to global liquidity, and for that metric, I use global broad money supply denominated in dollars. And that's affected by one of two main ways. Either money supply is expanding because of either money printing or credit creation, or the dollar is weakening, right? And so when the dollar is strengthening and credit is drying up, global liquidity is going down. And when the dollar is weakening and or credit is expanding, global liquidity is going up. And Bitcoin is very highly correlated to that. And so if you look at that, it's arguably more correlated to that than even its own halving cycle. But that's another variable. So early, in spring of 2024, Bitcoin is having another supply halving, meaning that the number of new coins generated every 10 minutes will get cut in half. So you have a supply shock, while demand is still pretty steady, and the spot ETF could potentially drive more demand. If you get the blessing of BlackRock, if you get these just easy ways for existing trillions of dollars of certain types of locked up capital to have a liquid vehicle to go in that's better than the futures ETF, better than the grayscale product that has fluctuating premium to NAV and all that. If you actually get a better product for them, plus the overall green light for some of those pools of capital to consider it a serious asset, that could be a demand shock. But even without that, I just think that generally the next 2 years, let's call it, of decent liquidity and a halving is attractive. So it's almost like I view this as like a bell curve where the classic midwit meme where someone on the left of the bell curve is just buy the orange coin, and then the person on the right is just it's the best asset ever, own it, and the person in the middle is finding every reason not to own it. They're like, no, there's a recession coming, or no, you can have all the list of reasons why it might not go up. But I'm kind of looking at it as just the classic bell curve thing where I think the next 2 years is supply going down and probably demand being flat to up, which should be constructive for price. Now, it's come very far in a short period of time. I mean, this it could fall 20%. It could retest its 31,000 breakout. It could go sideways for 3 months in a choppy band. But basically, I just think next 2 years, pretty high conviction that it goes up. It depends on the type of recession. If you get a actual liquidity shock, this worst part of 2008 or during COVID, if you get an outright liquidity shock, pretty much all assets go down except for the dollar. And so gold will go down, Bitcoin will go down, equities will go down. A lot of even long duration bond yields in those extreme environments can go up, meaning that even bonds can sometimes go down in those environments. And so if you do get something like that, that would override almost certainly anything Bitcoin specific. But again, because I view this as more an emerging market style recession, with just these massive deficits pouring in, while I don't rule out those types of liquidity shocks, I do think that the halving and the ongoing kind of liquidity situation, and then the weaker dollar, or at least the reduction in real yields we probably would get in a recession, would benefit Bitcoin. So I think that in that recession, at least outside of brief liquidity shocks, I think assets like gold and Bitcoin, they don't have to worry about earnings, and instead are mostly liquidity plays. I think they'd likely do better than stocks in a recession environment, would be my base case, especially when you throw in supply having ETF potential and these other factors.
According to Lyn Alden, in the next 6 months, Lyn Alden believes that Bitcoin will outperform the stock market. If an out-of-rate recession occurs, she believes that energy could either significantly under or in line with the larger equity market in my energy perspective, the next 6 months, then even 9 to 12 months and more, with a strong belief that it surpasses with a 3 to 5 year view, and Lyn Alden not really attempting to trade it. Rather, Lyn Alden just think that even with the present oil prices, the values are reasonable. So in essence, it's a favorable carry perspective on eventually having a supply-side driven bull market for energy, and with such varying timeframes for these many assets, Bitcoin, Lyn Alden be very certain in the 2-year perspective energy is little longer than that. But it's the same for developing nations. She believes that if you look at Brazil, for instance, you're seeing positive carry, and Lyn Alden have no idea what will occur in a year. But she feels fairly certain about how things will turn out. At least in a cautious attitude, it will take place over a number of years. Therefore, you should be aware of various time frames and assets. Let's back to the interview.
So I think Bitcoin will. I think that energy, next 6 months, if we get an outright recession, I think energy could be in line with or even slightly under the broader stock market. My energy view is less about the next 6 months, next even 9 to 12 months, and more pretty high conviction that it outperforms with a 3 to 5 year view. And I'm not really trying to trade it. It's just like the valuations are inexpensive even at current oil prices. So basically, it's a positive carry view on eventually having a kind of supply side driven energy bull market. And so different time frames for these different assets. So Bitcoin, I'd be pretty convicted in a 2-year view. Energy, it's a little longer than that. Same thing for emerging markets. I think it's, if you look at Brazil, for example, you're getting positive carry, and I don't know what happens the next year, but I'm pretty confident at least with cautious position sizing of how it's going to do in a multi-year period. So, different time frames, different assets.
According to Lyn Alden, in my opinion, depends on the sort of recession. For example, you might experience an actual liquidity shock during the worst of 2008. Or you might experience an outright liquidity shock during the COVID-19 pandemic. Almost all assets decline, with the exception of the dollar, and gold will also decline. Stocks will rise and Bitcoin will fall, go down significantly. Long-duration bond yields may rise in those harsh conditions, indicating that even bonds may go down occasionally in such settings. So if you do, and you do get anything similar, that would supersede most likely anything specifically related to Bitcoin. But once again, since Lyn Alden consider this to be more of an emerging market recession, with these enormous deficits coming in while she avoid discounting those kinds of liquidity shocks. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.